out there, and they have one more thing to worry about. Now, ultimately, I think it's a good thing, and this is a necessary ingredient, but as we look forward, I do think we should look to create a sandbox for the smaller players.
Do you see places where regulation is stifling innovation, Ruth?
I think there's the risk of it. One of the most extraordinary opportunities for all of us today is the application of AI machine learning to our businesses. It's already in so many of the elements of our life we take for granted, like voice search or image search and translate. It can be helpful in so many areas like disease detection. It's an extraordinary asset for us as a country, for us as a society. Mm-hmm. And so one of the key questions is how do we ensure, in particular in this area, where there's such potential on the upside and potentially on the downside, that we're managing it properly. Our approach, very similar to what has been done throughout history when there have been big science breakthroughs, is to try and put out a set of principles and ask others to build on it. And that was done with IVF and stem cell work and PCV. So this notion of industry standards and build, we think is a constructive and nimble way to continue to make advancements. One of the questions is, where does this go? And I think the risk in particular for the U.S. is how are we going to ensure that we're continuing to support innovation and not therefore really slow down what we're able to do relative to others.
I'm glad you brought it up. So how do the companies that are at the forefront of artificial intelligence, that are at the forefront of autonomous vehicles, think about this looming problem, let's call it, or potential problem of human redundancy? That's what everybody's worried about. How do you think about that?
Well, I think that from my viewpoint, listen, the press drama is of machines replacing humans. I actually think the reality, more so, is machines augmenting humans, right? The humans are one thing, machines are a different thing. Humans and machines are the best thing. And we do see machine learning starting to replace simple, repetitive, predictable tasks. And we think that as we're able to use machine learning for those tasks, we can use humans for more complex tasks, unpredictable events, etc. When we look at autonomous driving, our autonomous team is looking to solve the 1 to 5% simplest routes out there where, the human ingenuity really isn't rewarded. And that machine learning can actually lower costs, can make available our transportation solutions for more people. And as we lower costs, the market grows. As the market grows, we have more drivers. So from our standpoint, when you look at our business 10 years from now, we will absolutely have more drivers on the platform than we do today. And machines will be we'll be taking the 20% simplest routes. And so that right now, I think the hybrid of machines and humans together for the next 10 to 15 years is where the world is heading. And ultimately, we think that it will create more room for people to use their ingenuity versus machines doing the simple stuff.
Did you want to add something?
Well, I would agree. I think if I can just point everyone back to when ATM machines were introduced, and there was a concern that we would no longer have banks, and of course banks have continued to grow. This has been anxiety. It's much easier to see the things that may be going away than to envision the new jobs that will come out of this. And so I very much agree with Dara that new opportunities come, and we similarly look at AI as leveraging humanity, whether you call it augmented intelligence or leveraging humanity. It enables us each to focus on tasks in a more meaningful way.
So that makes me wonder, because and the connection you establish with the ATM is actually relevant for the question that I have in mind. There's angst, as you point out, Dara, whether it's manufactured by the press or not. There's angst about human redundancy, job losses, job reductions. There's angst about privacy. There's angst about the integrity of the electoral system. There's angst about fraud and ID theft. These are all byproducts of the digital age. Wall Street paid the price for underestimating, the degree of upset and outrage some of its business practices caused in the lead up to the financial crisis and its aftermath. Did Silicon Valley fail to heed those lessons?
I think the lessons, having lived through that period in financial services, What's been intriguing to me is how relevant they actually are for all industries. And the elements of what were the lessons from that period, I actually summarized somewhat differently. I think that the collapse, of course, triggered justifiable anger given the pain that so many individuals and businesses went through. But the lessons from the crisis, I would say the first and most important is identify your source of vulnerability and protect against it early. For banks, it was liquidity, and without it, you choked. And by the time banks or the financial system realized they had to focus on liquidity, it was too late. In technology, a lot of the issues that we've been talking about, which is focus on investing in long-term growth that creates value and focus on mitigating the potential downside, is where we are focused. And so understandable that there's concern, and I think Dara is spot on when he says that shame on us for not doing more on transparency and data and communication so people understand what's the value trade-off, what are they getting, what choices do they want. Go back to my comment about privacy, but I think there's some fundamentally different observations from that period.
Dara, your company just went through the debate surrounding the California statute that wants to reclassify for-hire drivers as employees. How, based on that experience and others that you've been in, how toxic would you say the political environment for the tech industry is right now?
I think it's a difficult environment, and we're right in the middle of it. So, for me to define toxicity or not is hard because I don't have an objective view. But when I look at AB5, I do think that society has been looking at kind of having a job, a respectable job, as equivalent of having a full-time job. And I think that era of kind of your job being about your company is over, right? I think the new era is about work and the work that you do as an individual. And eventually, I think I'd like to go to an era where a programmer can work for a great project on Google and then jump on and work for a great project for us, et cetera. This marriage of the work that you do as being a marriage also to a company, there's some people who may choose that. But I actually think the much more important marriage and satisfaction is about the work that you do. And I do think that we are moving in society to a new transition, which is the expectation is regardless of what you do, regardless of whether or not you want to attach yourself to a company or full-time work or part-time work or full-time work doing a bunch of stuff, there is an expectation of protections. There's an expectation of minimum earnings. There's an expectation of health care, et cetera. That expectation is already in place in Europe. And we think that the right way forward is not to classify everyone as full-time, to create what is hopefully, we view, the best of both worlds. You can be full-time if you want to. You want to work at a company for the next 10 years, go ahead. Uber's a great one. But if you don't want to get married to a company and you want to have flexibility of time, et cetera, there is a new classification that gives you the protections that you want. That's the dialogue that we're having. We're having it too late. And that is part of the issue of just moving too fast. But we think we're hoping that dialogue can get to a better answer than AB5.
I'm going to tie together two seemingly unrelated events of the past few weeks. We started philosophically and perhaps we'll end philosophically. And I hope you catch my drift here. So the first event is the Business Roundtable, effectively a lobby group, a trade organization for America's largest companies, embracing this notion of stakeholders, either in addition to or over exclusively shareholders. And the second, and this is where I'm hoping you stay with me, is the WeWork IPO debacle. And my question for you is, do they together, and with other things that we see happening, herald a new era of corporate governance?
So I would say when we look at the Business Roundtable commentary, much of it actually I would say goes back to the Google IPO statement, which is we're investing for the long term. We want to make sure we're investing in the right way to create value for the long term. And to do that, we actually invest in our employees because talent is the magnet that will drive long-term value creation. We invest in the communities in which we operate. You asked about this transition to a new economy, a digital economy. One of the things we're really proud of is the work we do in digital skills training around the globe. We want to make sure we're present in the communities in which we operate. We think about things like sustainability. Like we've been carbon neutral since 2007. We match 100% of our energy consumption with renewables. We keep going on that front. So our view is to be the magnet for talent, which enables us to create the magic that ends up being the best product for users and businesses, is actually a virtuous circle. And so it is, in many respects, a false dichotomy. The reason we don't provide earnings guidance and haven't, and when I was a banker at Morgan Stanley, I similarly advised clients don't do earnings guidance, is I think that it puts you in a trap of not making the right decisions for one of your many constituents, because you're either solving for a quarter or you're missing something you should invest in so that you don't miss the quarter. And so all of this, if you lens back and you go to Larry Fink's letters about invest for the long term, guidance can be a trap, make sure you're comporting yourself in the highest quality way. These are all mutually reinforcing. And I do think governance is one of the really critical elements. We have to make sure in every element that we are actually focused on what creates long-term value. Growth for growth's sake does not work. It never has, it never will. And if you go back to my point, which is greatest source of vulnerability, well, one of them is growth for growth's sake. That is a horrible long-term plan. And if you actually put in place the right structure and governance, I think that all of this ties and it is consistent.
If you want to talk to our employees, you have an invite anytime. So I appreciate it.
We've just seen a good example of that growth for growth's sake not working. I referenced it a moment ago. Dara, what would you add to what Ruth said?
I think Ruth put it together perfectly. I think so. The only thing that I'd add is we're in the era of transparency, right? Your external and internal truths have to come together. And I think what you are seeing now is this transition for some companies that have been private, that have been that have not had to show everything. Here's who I am, etc. When they get under the harsh spotlight of full transparency, tell me exactly what you are and what the truth is and who you are, both inside and outside. Then there are some who make that transition and some who don't. Right? We with Uber, we went through the governance transformations, etc. as we came public. It wasn't because we were really smart or forward thinking. It was because we thought we had to. We had to prepare for the bright lights, and we'd already experienced the bright lights, and sometimes they really make you sweat. But ultimately, I do think that this transparency, it goes to the beginning of the conversation. This is a different world. The light that is shining upon us is sometimes uncomfortable, but I think long term it'll make for a better society, it'll make for better companies, and ultimately it'll create a better environment for investment as well.
Well, Dara, Ruth, thank you for joining me under the bright lights here at the GBF.
Great to be with you. Thank you.
Thank you.
Eric Schatzker, Bloomberg Television, sitting on a panel, moderating a panel with Dara Khosrowshahi, CEO of Uber, and Ruth Porat, Senior Vice President and Chief Financial Officer of Alphabet and Google, talking about the topic of can big tech manage its own risk. We see a lot of these tech companies have gotten so big. There are some regulatory calls within not just the European Union, but now starting in the United States and some of the governmental regulatory folks taking a look at some of the big tech companies, seeing whether they need a little bit more of a heavy-handed regulation, talking about that, talking about sustainability in their business models, talking about good governance in their business models. So all of the issues that I think a lot of the big tech companies are dealing with.
There's an incredible irony here, and I was thinking about this as Dara Khosrowshahi was speaking, the experience of radical transparency. He was saying that we're in a very transparent era where everybody knows everything. And when you think of the digital era, certainly that is the case, or it seems like the case. But that said, a lot of these companies are private, and we're seeing the struggles come when they try to become public and when they do start to give some of the information in a more public way. So there's sort of this interesting paradox here that a lot of these companies thrive off of this transparency that's given all this data that they can work with, and at the same time there's a lack thereof in their being private. And I just think that sort of struggle is coming out with a real focus on corporate management that I think is interesting. Yeah, and it's, the most recent example would be WeWork, and it's probably the most extreme example we've seen in a long time is WeWork, which, as we all know, is the CEO stepped down. Eric Newman stepped down yesterday, and they have temporary CEOs. They've postponed the IPO, so that calls into question kind of the liquidity at the company as investors question the business model, number one, and question the disclosures that the company made in their regulatory filings, their S1 filing. A lot of investors felt like they didn't have enough data to really figure out how this company would reach profitability, and that's a similar issue for the ride-hailing companies, and Dara Khosrowshahi was talking about that as well. So I think what happens here is public equity investors, they don't mind betting on these long-term moonshots, whether it's an Amazon or a Google or Facebook, but they need to have a sense of, okay, I don't have to worry about profits today, but at some point you have to deliver profits to me. I'm an equity shareholder. That's what I demand. And if you can't give me a path to profitability, then that becomes an issue for these companies. We saw it with the ride-hailing companies in that economic model, and I think most recently we see it with WeWork here. Yeah, indeed. I just want to take a look at the markets, and we've been talking about stock markets. They are mildly positive, slightly up on the day as President Trump gives a more optimistic spin to U.S.-China talks. But really right now, it is important to take a look at bond markets, in particular two-year yields. After the New York Fed announced that it was planning to boost the size of Thursday's repo operations, of tomorrow's repo operations, you saw a pop in two-year yields, which I find kind of interesting. Now they are currently more back down to where they were before, 1.649%. That said, it seems to indicate that investors are somewhat concerned that this could indicate a liquidity issue or some sort of short-term financing problem. At least that's the implication from the pop. Nothing extreme, right? But something still to notice. It's certainly incumbent upon the Fed to kind of communicate clearly as to how they think about the short end of the curve and liquidity in the marketplace. What they don't want to signal is a QE for that, for example. Indeed. We are broadcasting live from the Global Business Forum. I'm Lisa Abramowitz with Paul Sweeney. This is Bloomberg.
1 in 4 children believe potatoes grow on trees. 1 in 5 children believe fish fingers are made from chicken. And 1 in 8 adults believe the moon landings didn't happen. People believe all sorts of strange things. Some people believe that insurance companies try to avoid paying claims. But last year, Zurich paid 99% of insurance claims made by their UK customers. Zurich, an insurance company you can believe in. To find out more, visit zurich.co.uk/99.
Did you know Carphone Warehouse does business? That's why we understand how hard it is to go from this to this. But when you switch to the Samsung Galaxy S10 smartphone with O2, you don't have to. It's packed with features to help you stay on track on the move. So, if you want to end your summer feeling like this and not this, switch and save today with O2 and get the Samsung Galaxy S10 with 60 gigabytes of data for only £43 per month. Visit your nearest store or go online at business.carphonewarehouse.com/switch and save.
Breathe in and out. Every day, you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission